Michael Wilshire of Bloomberg New Energy Finance.
Thank you very much.
Handshake, motivational handshake.
Motivational handshake. Thank you very much, Jan.
You don't need it, but you get it anyway.
Well, thank you very much, Jan, for that very kind introduction. I'm going to talk a little bit about some of the trends we see in global trends in clean energy. Before I get into that, just a couple of words about Bloomberg New Energy Finance. We were actually originally a startup in, I think, 2004. So we've been going about 10 years. We're now part of Bloomberg. We were acquired by Bloomberg end of 2009. And what we do is focus on essentially trying to understand what's going on in the clean energy sector, but also more broadly what's going on in terms of the whole energy system, because we started off focusing very much on areas like wind and solar. Increasingly, how these different elements fit together is becoming a very important strategic issue for our clients. So what we do, we have roughly 200 people around the world. We focus, our research teams are spread out in all those geographies on the map. So we're very global in our approach. We look at wind, solar, and the other generation technologies. We're also looking at gas, because shale gas in particular is having quite a disruptive impact on the energy system. And then we have teams focused on energy smart technologies. So that's a mixture of storage, smart grid, home energy management. It's more IT technology-based in many areas. And advanced transport, we have another team looking at that, electric vehicles and beyond. And then we do look at the carbon and REC and other trading markets related to the energy system. So that's what we do. What I want to do is take you through some of the highlights of what's been happening, first of all, in terms of investment. And then I'll talk about the patterns of investment, but then also about the future. So this part is really more about what's happened in the first part of this presentation. So essentially, this is showing new investment, and this is net new investment in clean energy. So it's not looking in this chart at the acquisitions, and there's quite a lot of acquisition and assets changing hands. This is just the net flow of new investment coming into the sector. And we are still talking very much about a large industry. It's no longer a niche. It's a $250 billion industry. You can see the pattern. We've had some fall off in investment in the last couple of years, or plateauing off, although actually the outlook for 2014 at the moment is pretty positive based on the first 3 quarters that we've seen. Those are the investment numbers, but if you translate that into how much has actually been built, you can see it's a somewhat different pattern of growth and a much faster pattern of growth. So we're forecasting actually roughly 15% compound annual growth rate into the future for the next 3 years beyond 2013, including 2014, which is a fairly good rate of growth. The reason that is somewhat faster than the investment numbers is that largely because the cost of clean energy is coming down. So we're seeing increased cost competitiveness. A lot of the build-up of clean energy depended on subsidy and support. I wouldn't say that need has gone away completely, but the industry is becoming much less dependent on it and much able to stand on its own 2 feet on a cost-competitive basis. So what's going on around the world? This is a fairly mixed picture if you look at it. So this is breaking down the new investment by region. And you can see the pattern is particularly volatile in Europe, where we had this build-up. Countries like Germany and Southern Europe invested very heavily in clean energy, but we've seen a real drop-off in the last couple of years, due really to pullbacks on policy support, and in particular retroactive action. In other words, going back in time and rewriting the feed-in tariffs, not in the investors' favour in Europe. And that has scared a lot of investors off from future investment for obvious reasons. North America tend to be a bit more stop-go because the pattern of policy support there is more to do with tax, or has been. So it's been an issue of whether a tax regime would be extended or wouldn't. At the moment, the tax regime hasn't been extended, but it was it's still operating for assets that have been started. So we're still seeing some of that growth persist into 2014. So it's more a kind of cycle that you see in North America. The standout story for growth, though, at the moment is Asia. And a large part of that is driven by China, which started off mainly investing in wind. But in terms of the installations of capacity, it's very much a wind and solar market now, with a lot of solar being built in China. And it's not just China. We're seeing very strong growth in Japan and indeed other parts of Asia. So it's a pretty broad story across Asia. And then the last two regions, Central and South America, really started off as a biofuels market, but now you see a lot of wind investment there, and Middle East and Africa, small numbers relatively speaking, but actually growing quite rapidly. So that gives you a sense of the patterns. In terms of the patterns by sector, this is just a similar set of numbers. It doesn't include the R&D numbers, which were in the original numbers, but this includes a lot of that investment on a quarterly basis to show it a little bit more clearly. And I won't go through this in detail, but the yellow shaded area is solar. So you can see when I started doing this about 5 years ago, solar was about 20, maybe 25% in a good year of total new investment in clean energy. Now it's something like 60 or 70%. And the reason for that is the costs, and I'll come on to this, the costs of solar have been declining much more rapidly, actually, than from a higher base in some cases, but much more rapidly than any other form of clean energy, which is why you see that pattern. So wind is still important, but solar, and in particular distributed solar, is moving very, very fast indeed. Distributed, by which I mean rooftop installations. Same set of numbers here on a quarterly basis, but this time breaking it down by asset class, which we do. The largest class by far is project finance, so it's asset finance. So this depends on bank finance, so we're talking about large pieces of kit in the main here. But again, the yellow area is small distributed capacity. Not all of that, but the vast, vast majority of that is solar again. And the reason for showing it this way is it kind of shows you something's going on in terms of the mix of the system. We're moving from a system that in energy terms was much more centralized generation, and centralized even within the clean energy sector, to something that's much more distributed and at the edge of the network. So there's a fundamental kind of change in architecture taking place as well, which I think is actually very interesting and very disruptive. Obviously, it's a VCP audience here, so I put the chart in. It's on a different scale, so you can see it a little bit more clearly. So the numbers here are relatively small. But you can see this has been fairly volatile, but it is holding up. And the bottom area, the green area, is probably the category that's held up the most in terms of stability. That's energy smart technologies. But we do see continued VC investment in areas like solar, which you might think by now would be a fairly mature technology. We're still seeing quite a lot of innovation, or the search for innovation take place there. So this is very important in driving growth into the future, because you're effectively, it's the next wave of disruption. And a lot of the problems that need to be solved in the energy system will have to be addressed by some of the companies underlying this. Some of the top transactions of the quarter, just to run through them quickly. Zuma Energia is a developer actually in Mexico. They do wind and I think geothermal as well. Lattice Power we've classified as energy and built environment. It's actually an LED company. So they're producing gallium nitride LEDs, which are a lower cost form of LED. LED, by the way, is a really important category. I mean, lighting accounts for roughly, I think it's about 10% of electricity consumption. So if you deploy LEDs widely, think about what that's going to do. Glasspoint Solar is actually producing steam from solar thermal, so deploying it, for example, for enhanced oil recovery, but actually generating the steam from solar power. Renovate America is financing for energy efficiency improvements in community and homes. And Selexel is another PV company. I think they're working on thinner slices of silicon to produce the PV cells. So again, innovation in the solar sector. And that's one of the examples. And that's simply a quarterly snapshot. I could show you that every quarter, and it was obviously change. How have the numbers been doing in terms of the companies that are already quoted? And we have had a number that have exited already. We produce, it's our own index, but we call it the NEX, the New Energy Index. So it's a basket of stocks in the clean energy sector. And you have to be really clean energy or a lot of your business has to be weighted to clean energy to get into this index. So we're not looking at companies where clean energy is kind of 5% of what they do in this index. It really is a clean energy index. You can see the red line is the NEX against some comparables, and it really has been a roller coaster ride. We did say back in, actually when I started doing it, working in a sector, back in the beginning of 2008, that we'd never known an industry that had grown quite as fast as clean energy on a sustainable basis, looking at the chart then, and we were expecting a correction. The correction, when it came for other reasons, the financial crisis, and was actually quite severe, although obviously it affected everything. And then we saw a sort of recovery and a fall back, but actually a fairly steady recovery in stock valuations on average since the beginning of 2013. So that's just one indicator of arguably the health of the sector. Now, I did say the first part of the presentation was to give you a sense of what's happened. I really wanted to switch gear and talk a little bit about the future, and particularly about this point about cost competitiveness and some of the elements of disruption in the energy system and clean energy, because I think there are some real examples. So to take solar first, you've probably seen these kind of curves before. The curved one, not the straight line, but the curved one is looking at total cumulative solar installations globally since, in this case, 1990. I think we actually had the numbers back to 75 or something, but they really are very, very small there, probably just a few panels. And you can see it sort of looks like an exponential curve. So to prove it was exponential, we took the logarithm of that. And actually, it's even, I called it hyper-exponential, actually, which is probably a bit of an exaggeration, but it is slightly upward sloping. And it only has to be a straight line to be exponential. There aren't actually that many industries that over a sustainable period have grown exponentially, because exponentially means you're doubling every interval of time, and that's a pretty tough test to keep going. But solar is one of the few industries that so far has done that. So I do think it's quite unusual in showing the hallmarks of actually a very high growth and disruptive technology. And that's not quite what any of us actually thought when we were looking at it 5 or 6 years ago. I don't think we realized just how fast solar was going to grow. Perhaps we didn't fully realize. We did do some analysis even back that far, looking at experience curve effects. And this is on a log-log basis. So the horizontal axis is, again, looking at cumulative installations of solar capacity around the world. And the vertical axis is looking at the cost per watt of solar, so the cost per unit of capacity. And you can see it's a kind of straight line relationship. And the way to read this is every time the cumulative volume of solar installations around the world has doubled, roughly the cost has fallen by 24%. And that's a high number for every doubling of cumulative capacity. Again, you probably find a higher rate in things like Moore's law in semiconductors, which is very aggressive. But that is a high rate for a technology industry. There are fluctuations around the line, and in each case you can relate those to supply-demand fluctuations in the industry. So sometimes there was an oversupply of capacity and prices went down. Sometimes there was a shortage and prices went up. But the long-term linear effect is very much there. The reason there are two lines is one is for thin film solar, the bottom one, and the upper one is for crystalline PV. But this is showing some pretty relentless growth, and we expect that to continue into the future. There's no fundamental reason why that innovation is suddenly going to stop dead. One other important part of solar is not just the cost of the modules, which are now coming down to levels where, if anything, the other parts of the solar system are more important. So we look here at the total PV system capex. So there's a lot of innovation going on here, and it's not necessarily high-tech innovation. It can be as simple as innovation around the racks that you use to install things on a rooftop and just making it more modular and faster to install. So you can see two things, actually. One is, because this is showing it for a number of different countries, one is the trend is downwards, but there's still an enormous variation in the cost. If you go out and ask for a price for a PV system, there's an enormous difference between different countries in the price you'll be quoted. So if you leave aside the bottom line for the moment, which is actually China, the next one up is Germany. And actually Germany is pretty much best practice other than China in terms of costs, and the others are way, way higher. Some of that is to do with the margins that developers capture, but quite a bit of that is also to do with basic efficiency and experience. So just animating that a little bit, here we look at when solar becomes cost competitive. So along the horizontal axis, we've got insolation, as it's called. It's a measure of how much radiation there is and how sunny it is. And the vertical axis is the price that you would pay as a retail customer for your electricity. So One way of looking at this is if the price is high enough that you would otherwise have to pay and you're in a sunny country, you might think about putting solar panels on your roof. And you can look at the LCOE, the levelized cost of energy through building solar, and that's effectively your curve of indifference. So above that, it would make sense to install solar. Below that, it wouldn't. That's what the curve looks like in 2004. You can see there are already many countries that are above that line, where on a retail basis it makes sense to install solar. And I should say this is without any subsidies. So if you're getting subsidies or feed-in tariffs into this, it looks even better. So this is just pure economics. Fast forward to 2020, and many more countries enter that zone above the indifference curve. So again, this is a sign that solar is already cost competitive on one measure at least in many parts of the world. And that's, as you forward the projections through to 2020, which is based on our experience curve, we'd expect many more to be added to that list. It's not just solar. I won't spend a lot of time covering wind, but just to say hub heights, blade designs, improved component parts, better sighting, turbine cost control software, better availability, you name it. There's a lot of innovation going on in the wind sector as well. The effects of that, doing the same sort of experience curve analysis, it's not as aggressive as solar. Every time you double the cumulative volume, you get roughly a 14% fall in your cost per kilowatt hour generated. I said kilowatt hour quite deliberately because unlike the capacity numbers, you really, in wind, you have to look at, well, there's a lot of innovation that's improved capacity factors and how much you get out of your capacity, in effect, how efficient it is at capturing the wind resource. So that's factored into these numbers, and that's leading wind to become, it is already cost competitive, but even more cost competitive into the future in many parts of the world. And then to complete the picture, another experience curve around lithium-ion batteries, which we started looking at for electric vehicles, and the green areas where, on a total cost of ownership basis, a lithium-ion battery would have fallen to a price point whereby, on a total cost of ownership basis, it would be economic for you to buy an EV versus a conventional gasoline vehicle. And I think the bottom curve, the bottom line actually was the same curve, but for consumer lithium-ion batteries. So effectively, we used the same sort of analysis but looked at it for traction batteries. The one thing that's changed that, or accelerated that rather, is Tesla's announcement of building a Gigafactory. So that's sort of taken us forward to 2020, where we're expecting the curve to be in 2020, in terms of bringing the cost down, because it's roughly doubling the amount of cumulative capacity, lithium-ion traction battery capacity in the world in one go, in one or two gigafactories. So we expect that to come down. And this is not just relevant to EVs. I was very interested in one of the presentations earlier talking about batteries as a form of distributed storage, because if you've got EV demand and EV battery manufacturing driving down the cost of lithium-ion batteries, that could also have a knock-on effect on distributed solar, because one of the things about clean energy is it may be cost competitive, but it's often intermittent. I mean, it's not working exactly when you might want it to. So there are all sorts of things you can look at to balance the system in terms of having reserve capacity, international connection and demand response, whatever. But storage could be another of those solutions. So I think there's a very interesting dynamic where you've kind of got two virtuous circles. One is the virtuous circle that's driving down the cost of PV, and the other is the virtuous circle that's driving down the cost of storage. It's not just lithium-ion. We're seeing innovation elsewhere, but it's a very interesting dynamic. And interestingly, Elon Musk has got a foot in both camps because he's got a big investment in Solar City as well as in Tesla. Just to conclude on that, on the VCP investment in batteries, we still see a lot of money flowing into that sector in terms of search for innovation, and not just into lithium-ion, but into other technologies as well. So things like flow batteries, compressed air storage, which isn't a battery, but it's another form of storage, and other technologies as well. So there's still money flowing into this, and we do see a lot of innovation of all sorts in terms of storage. I'm talking here more about stationary storage. So this is storage for things like grid backup, for electricity storage as opposed to running your electric vehicle. You certainly wouldn't put a flow battery, which is runs at, I think, 500 degrees centigrade or something in a vehicle, or I wouldn't anyway. In terms of the outlook for those applications, and again, this focuses on stationary storage, we do expect that to grow. It has been growing. We do expect that to grow into the future. So at the moment, up to about 2018, it's more to do with generation and transmission. And a lot of the storage you get at a power system level is things like frequency balancing. It's relatively short-term balancing, as opposed to shifting power around over long periods of time or shifting energy from one period of time, for several hours ahead. But we are expecting to see much more of that in the future. So the end user segments, by which we mean the distributed elements of storage, grow quite rapidly to about 40% of the total on these projections, at least by 2020. And energy, as opposed to power-intensive systems, i.e. shifting the energy from one period to another, we expect to be a much higher, probably 60% of the total by 2020. So storage is relatively short-term at the moment. We expect it to move to much longer-term storage. So those are the points I wanted to cover in the main. I do have one last thing I want to say at the end. But just to summarize, we have seen a pattern of strong growth in clean energy. We are now seeing a period of cost competitiveness, and I think we are seeing at least a couple of very disruptive technologies that kind of may work together that will accelerate that still further. The one last slide I wanted to leave is actually we do have a competition, if you like, within Bloomberg New Energy Finance, which we call New Energy Pioneers, where we look for really exciting, fast-growing, promising companies that could have a major impact on the energy systems of the future. So we get in literally hundreds of applications for this. We have an external selection committee. A couple of us sit on it, but it's actually mainly external people. And we review the companies. And I do want to emphasize the criteria, because any of you in the audience would be very welcome to apply for this. But the criteria you'd be judged by would be scale, by which we mean something that's not just going to be an interesting and good business of, say, $50 million, but actually has the potential to grow to something that's really going to impact the sector. Innovation kind of goes without saying, but we're looking here for, it needn't be technological innovation, it could be business model innovation, but something that's really distinctive and defensible as well. And last but not least, momentum. We do look for not concept companies or very early stage, but companies where there's some evidence of progress to date, which can be, revenues and profits are fantastic, but alternatives, or even better actually as well, would be things like customer relationships or early agreements. So some sign that it's working and that people are taking the company seriously. And these are the winners from last year. The winners, and we normally select 10, get invited to the Bloomberg New Energy Summit, which is in New York this year. And it's quite a big event over 3 days. And they get to present to a pretty impressive audience and showcase what they've done. And also there's some media and other exposure associated with that. So if you are a company that you think fits those criteria or know of one, then please do apply. You can contact me, but the details of the whole program is on the web address at the bottom. Thank you very much.
Thank you very much, Michael. Do you have a question to Michael?
Hi, Michael. I was just wondering your view or take on the situation of the lithium market and how it seems to be kind of centered around, I think it's Chile, isn't it? Whether there are other resources and how that plays out as we move more down the road of electric cars or electric transport.
Yeah, it's a very good question. We get asked it a lot. The answer is there are other, you're right, the current deposits of lithium are concentrated in certain places, and it may be difficult at some point to extract more and more lithium from that. But they're not the only places where you can get lithium. So actually we've done an analysis looking at sources of lithium around the world, and we do think it's very unlikely at the moment at least to be a constraint. There may be other versions of storage. It's not necessarily the case that lithium-ion is the one that wins through. It may be other types of lithium battery, but we think it's relatively unlikely at the moment that that's going to be a constraint.
You showed a graph with the cost of installation and the cost of electricity, and when you would reach parity. Saudi Arabia was an outlier there, I would say. A very low cost of energy, which is true, but the installation costs were extremely high, as if I interpreted the graph correctly.
I don't know whether I can I get back, or? I think you're right. Hang on. Yeah.
So, because the horizontal is the installation cost, I think.
No, actually, the horizontal, I'm sorry, is not the installation cost. It's the insulation. Sorry, I didn't pronounce it clearly. It means how sunny is it. Radiation.
Hours of sun.
So hours of
sunshine.
But you're absolutely right. They do have a very low electricity price, and that's common in the Middle East, where electricity prices are often, actually for many people, are often free. That doesn't. And actually, an issue for them is, would it be better to, because a lot of that is fossil fuel, it's oil burn. So would it be better to install solar and save the oil and sell the oil on the world markets? We've done some analysis showing actually it probably would be. But that's another issue. And Saudi Arabia has very ambitious plans, by the way, for solar.
Yeah, and he's with Sabic Ventures.
Okay.
Yes, thank you very much for a very interesting presentation. We see very well on this slide how extremely differentiated the prices of the consumer price of energy is in various countries. Looking at Denmark and Germany, and knowing that Sweden is just in between those two countries, having 1/3 the energy price, how long do you think this extreme difference can remain in a region that is much smaller than, the distance between those three countries is of course very, very limited. So it would be easy for Germans to buy electricity from Sweden if that were a possibility. So when do you expect prices to even out?
Well, there is some, I think there's sort of two parts to answer that. There is some international trading that goes on, and if anything, we're expecting to see more of that because one of the ways of balancing the system on a macro basis is to have more international interconnection. It makes sense to trade power much more. So that could tend to equalize it. But I think the other thing that could equalize it is actually competition. So, if you're in a country where, one thing I didn't say and probably should have done is an interesting thing about solar is not just when does it reach grid parity, but just how far will the cost of solar fall. And I think we could see a world actually where the cost of solar falls to a fraction. I don't know what that fraction is, but it might be half or might be a quarter, I don't know, of the price of other forms of energy generation. And at that point, you're going to get something that's a very interesting competitive dynamic where it may not be sustainable to have high electricity prices in some countries unless you, at the same time, stop people putting solar on their roofs. So I think we will see another interesting thing about this disruption is it's causing more competition and different business models. And I think that in itself will help to equalize prices more.
So it is foreseeable that the energy price in a country like Germany will be coming down in maybe 5 or 10 or 15 years?
Well, the energy prices in Germany, you've obviously got Germany was very early in, so Germany paid more than you would now for solar capacity, and that's reflected in the premium that gets added to electricity bills. But in terms of the spot prices have, it's a slightly complicated thing because you basically got zero marginal cost generation from wind and solar going into the wholesale price and depressing prices at certain times. So in Germany, actually, the wholesale prices have fallen a lot, and that's not good news for some utilities who may have a lot of gas capacity that's utilised less than it was. So that the pricing story is actually quite a complex mix. But I think the long term is we are seeing increased competition from other non-fossil fuel forms of generation. And the story is sort of moving from just one about climate change and CO2 to one that's actually this stuff could be, quite good in terms of diversity, in terms of cost competitiveness and so on.
All right. Thank you very much. Okay, we have one more from Asher.
You said that the prices of lithium-ion batteries for, I think it was for EVs, or not sure if in general, went down 43% since 2013, but there wasn't a continuing trend. Is it reaching a floor?
I think, sorry, I don't have the chart. I won't try and get the chart. There was a particularly rapid fall from 2014 to about now. So, you know, that was part of what was happening on that experience curve. We would expect that experience curve to continue into the future. So I'm not saying it will fall by 43% every 15 or 18 months. That was probably more exceptional and one of these sort of cycles. Because during that period, by the way, there was quite a lot of supply into the market of lithium-ion batteries. So it's probably one of these periods where the industry was a bit oversupplied compared with demand. So you get that particular fall. But the long-term trend is down, undoubtedly. We were expecting by 2030, based on some fairly moderate projections for EV take-up, which we've done looking at consumer adoption and what might happen, that the price of lithium-ion could fall by roughly a factor of 5 between now and 2030. If you believe EVs are going to ramp up to that extent. And I think, the Tesla announcement probably tends to confirm that's the path we're on.
I'll leave for another time the technology after lithium-ion, but that's...
All right, Michael,
Okay.
Thank you so much for joining us
Pleasure.
and sharing the numbers
Okay.
and the forecasts. Thank you. We are now continuing